Hello and welcome to another edition of the China Global South podcast, a proud member of the Sinica Podcast Network. I'm Eric Olander. Today we're going to focus on Indonesia. Now, this is a country that doesn't get anywhere near the attention that it deserves. Out here in Southeast Asia, it's clearly one of the biggest players, but it should be a much bigger player worldwide when you consider the fact that this is the fourth most populous country in the world, 282 million people, largest Muslim majority country in the world. And really, when we talk about the Global South, it's at the core of so much. The 1955 Bandung Africa-Asia Summit still very much today stands as a pillar in the Global South narrative and the discourse. But it's also now a pivotal country when we talk about the great power competition. It's been that way for a number of years. In terms of where it's playing out most, energy is one of the key vectors of this competition. Let's talk about the energy space here, because Indonesia is very much like a lot of developing countries, middle income, kind of bordering up on upper middle income, where it's stuck in the old ways, but recognizes that it has to adopt some of the new ways. And those old ways in Indonesia is coal. In 2024, Indonesia produced 836 million metric tons of coal. It's one of the world's largest coal producers. And it's not just that it's coal, it's crappy coal. We've heard about clean coal, right? That feels like an oxymoron, like healthy cigarettes, but okay. But the coal that comes from Indonesia is particularly dirty. About 60% of it are of lower quality, and that means it pollutes a lot more. Coal plays a huge part of Indonesia's energy mix and across the region here in Southeast Asia. And the problem is that while there's a lot of concern about the emissions that come from Indonesian coal, it's quite incredible. We know what it's doing to the environment, and yet they're still building more coal-fired power plants. The reason why they're doing this, because coal accounts for about 3.6% of the country's entire GDP. Now, that being said, while coal is hugely important to the Indonesian economy, and let's just not single them out here for that, because we have a lot of economies like South Africa where coal is also very important, they're starting to show some headwinds here. The first half of 2025, exports are down. They're only at about 48% of their annual targets, in part because China is not buying anywhere near as much coal as China now adopts cleaner, greener energy methods. But what's interesting is that there is a push in Indonesia now to increase the amount of renewables. Now, renewables stand at just 14.5% of Indonesia's total energy mix, and that's made up mostly of hydropower, biomass, and geothermal. Geothermal, of course, makes a lot of sense, in part because it's very volcanic around that part of the world. And so it's not surprising then that with such a low base for renewables, that the Biden administration and the G7 countries in general looked at Indonesia and said they would be a prime candidate for what they called back then JETP, which is the Just Energy Transition Partnership. Now, this was a huge thing back then, a lot of fanfare about JETP. Vietnam was also a JETP country, South Africa was a JETP country, and Indonesia was one. They put $20 billion on the table for this energy transition initiative. Now, the problem is that, and I was never a big fan of it, because a lot of that money that was on the table, around half of it, came in the form of loans. And a lot of Indonesians said, listen, us borrowing money from Western banks isn't really going to help us. And so to date, only about 6% of that $20 billion, or about $1.2 billion of the JETP financing has been committed. The U.S. has now pulled out of JETP under the Trump administration. The other partners are continuing with it, but it feels like this is kind of a half-ass effort that the West is doing here, or the G7 countries are doing here. When you consider that Indonesia is going to need about $97 billion to facilitate its transition to renewable energy, the $1.2 billion that's come through JETP is meaningless. Well, let's shift our focus now to the Chinese, because it's a very different story. The money from China is flowing into Indonesia in just massive, massive waves. Chinese companies back in 2023 signed $54 billion of agreements with Indonesia's state utility, PLN. Then the following year, when President Prabowo Subianto went to Beijing, he got another $10 billion in pledges from the Chinese for renewable energy transition. So this gives you a sense of the scale that's happening between the US, China, the G7, all for this huge energy transition that's taking place in Indonesia. One final point that I want to make. Indonesia is critical in the critical minerals industry as well. So Indonesia is one of the largest producers of nickel that is used in those nickel, cobalt, manganese batteries. Those are the NCM batteries that power a lot of Teslas around the world. And nickel is also a key ingredient in steel as well. The Chinese are the largest players in the smelting of that nickel in Indonesia. And Indonesia is on chart to be, or on course to be, really the first developing country to develop the full supply chain or value chain from mine to manufacturing of electric vehicles. So mining the minerals, processing and refining some of those minerals, those are starting to happen now in Indonesia, going to battery production, then to auto production, and then to the showroom floor. They still have a long way to go, but they are making advances far more than any other developing country. So with all of that in play, an article or paper came out this summer that really caught my attention. Indonesia's Energy Transition, Exercising Strategic Agency in Partnership with China, by Kevin Zongzhe Lee, who is an affiliated researcher at the Center for China Analysis at the Asia Society Policy Institute in New York. And we are thrilled to have Kevin on the show for the first time, joining us from New York. A very good morning to you, Kevin.
Good morning and good evening to you, Eric. It's wonderful to be joining you on this podcast here this
Yeah.
morning.
Yeah, it's forget about the hours. We give up on that. It's we're across the time zones here. Let's talk about Indonesia and why it's so important. You focused on this for this paper that you put together for the Asia Society Policy Institute. You said that Indonesia is at a critical intersection of climate urgency, development ambition, and geopolitical complexity. And I touched on that a little bit in the introduction. But let's talk about this very complex mix that Indonesia is facing and why you chose to focus on it.
I think it's the great question to kick off. I mean, Indonesia, as you've said, is one of possibly the most important rising emerging market country member of the Global South. They are situated at the trading route, the Malacca Strait. They're situated to the south of South China Sea. Naturally, this country that spans 5 or 6 different time zones is going to carry tremendous consequences when it comes to both economics, trade, investment, security, and geopolitical with those weights. What makes Indonesia so interesting today is that the country has been speaking about potential in the sense that the country can become, or the country will become, if for the longest time, and it may now see an opportunity to set a very ambitious economic growth target of 8% by the end of President Prabowo's first term. It is recognizing the chase towards modernizing electric vehicles and clean energy value chains and so on and so forth that are carried out in partnership, primarily because China has that sort of technology, the cash, the financing, the capital, the knowledge, as well as the human capital behind all this. And China is very keen on solidifying its ability to continue to drive progress on technology, on clean energy. And Indonesia, as you have mentioned, is well endowed in that sense, with nickel, with other critical minerals as well. Indonesia is also looking to leverage its market of 280 plus million people to grow its middle class. It has sort of a tension to be able to achieve these economic targets while also playing the role of an increasingly important middle power country that wishes to be able to withhold its promises to achieve a certain degree of renewable energy targets by 2035, by 2050. So there's also that sort of reputational, that sort of image, that sort of credibility aspect of it that drives Indonesia of wanting to rise up as a country that represents Southeast Asia, that represent Asia. And I think its relationship with China, its relationship with the West, its relationship with businesses around clean energy is very important at this critical time.
We'll dive into the specifics about China, but I want to go back to what you've touched on here, that Indonesia is a core country for the renewable energy transition, but at the same time, it's a country that's facing a dilemma that a lot of countries are facing, where it has aspirations to use more renewable energy, but the economics are just very powerful. And there are also deeply embedded interests in the coal economy in Indonesia that are going to be very difficult to displace. And so when you have an industry that accounts for 3.6% of the GDP, how do you move forward into cleaner energy at the same time as not alienating those powerful vested interests in a system that's made them wealthy, and they don't necessarily profit from the transition to biomass, hydro, wind, and solar?
I think the incentives absolutely have to be aligned in order for any of the transition to be meaningful. For one, renewables have to be lowered cost. Renewables have to be able to compete to thus actually be able to represent a strong force that works alongside the economics of it. In addition, it also must have to engage with foreign/external partners on this. Without the necessary funding, as you've described, I think by design, this will not be coming in the forms of grants. It will not be the concessional loans that are provided by the World Bank. Those are going to be helpful for sure, because catalytic finance is going to help unlock and create openings for some of the early pilots, for creating impact, though not at scale. What is going to require is the better merging between industries, industrialization, especially around clean energy, alongside the goals to mitigate carbon emissions, the goals towards decarbonization. And I think that type of money, that type of investments is not going to be coming from the US, because the US is not a leader in the clean energy transition at the moment. It's going to be China, because it has been both a mix of policy design by China, but also surely because of its sheer economic gravity, right? Chinese, both state-led firm that has sort of dominated the first wave of infrastructure and energy investments in Indonesia, that you could say is primarily in industrials, it's primarily in traditional fossil fuel based energy, that we're now seeing a shift towards more private sector led businesses investing, localizing manufacturing in Indonesia, brands like BYD, right? So we're starting to see that shift. And that shift is, I think, most welcome for Indonesia, because as opposed to government contract, where you're starting to run into these issues with regards to debt, with regards to environmental, social, and governance issues, particularly from voices on the ground, the private sector players might have a better chance of, one, managing risks to a higher standard than what has been set by their friends and counterparts in the state-owned businesses side of things. But also, I think they're more business driven, they're more profit driven, which means it creates a case, I think, for Indonesia to be able to further leverage these FDI coming from the private sector alongside their technologies and human capital development potential as well.
Yeah. China is a complex actor in Indonesia, particularly on climate issues. So you've rightly pointed out that there's a lot of interest to sell BYD cars, solar panels, and all the new energy technologies that the Chinese are so famous for right now. At the same time, the Chinese have been instrumental in Indonesia's coal industry as well, building power plants, also building off-grid coal power plants to electrify the smelters. So remember back in 2021, Xi Jinping banned public financing for coal-fired power plants. But there was a loophole in that, and it was only for on-grid coal power plants. So these off-grid plants that are powering smelters, for example, they can receive public financing. But at the same time, you've talked about that China is a pivotal but pragmatic actor when it comes to the climate, the energy transition in Indonesia. That's the commercial logic that's driving their engagement there. What does pragmatic partnership between Indonesia and China in this space actually look like?
I think this is where I coined the term development compatible decarbonization. That I believe for any host country, such as Indonesia, to be able to engage seriously in the energy transition itself, that cannot come at the expense of economic competitiveness of the country. Now, Indonesia is a country that's well endowed in coal. The environmental impact of coal is well recorded and well understood. But whenever I speak to a proud Indonesian, the first thought that comes to mind is that they still need to create jobs. They need exports. They need access to reliable power. Indonesia is deindustrializing at the moment. That is heavily concerning for a country with the level of ambition for Indonesia. So, in order for that climate ambition and industrial ambition to be able to move together, in order to achieve that green growth, you're going to have to be somewhat pragmatic. You're not going to be able to support your industries if the renewable energies are priced at higher cost. You're not going to get around it if you have policies in place that are protective of your domestic industries, specifically around coal. Though what you could do is try to align the incentives in a way that makes renewable energy, if not more inexpensive, then at least priced similarly, or for it to play a different role, such as providing residential communities in the island of, say, Borneo, with access to solar plus storage projects, and thus not being considered in the exact manner of having to connect them to the existing grid, which we all know the state utility company PTPLN is quite difficult to deal with, having signed into these long-term contracts with coal that extends far into the 2040s. So I think they have to get innovative here with renewable energy. They have to think about how to continue to industrialize. Because for Indonesia, that is going to be massively important to achieve, if any, higher economic growth ambitions.
But this is, again, why the relationship with China is so complicated. Because on the one hand, yes, there is a need to industrialize, and it's the same across Southeast Asia, and in fact, across the world. How do you industrialize when you have China, who is a modern manufacturing marvel, who is able to make products at a scale and cost that almost nobody can compete against, that dreaded China price? And I know it here from living in Southeast Asia that I can go onto Lazada, which is the equivalent of Amazon. It's the main e-commerce platform here in Southeast Asia. I can order pretty much anything. And in the old days, it would take 2 weeks to come from China, clear through customs, and then show up at my door. Now it's coming next day, even sometimes same day, from China. It's incredible how fast the stuff is coming. This presents a very big challenge for a country like Indonesia. And we saw the tensions building in Indonesia this summer with the uprisings of Gen Z, which were extraordinarily violent. So the pressures are there and building to do what you're talking about. But at the same time, when we hear from Indonesian stakeholders and thought leaders, there's one word that continually comes up about their anxiety in dealing with China, and that's dependence. There is a very strong sense that if they lean too heavily into relying on Chinese technology to power their energy transition, that they are going to substitute one form of dependence on coal to another form of dependence, which is on Chinese supply chains. And that makes people quite nervous. Talk to us a little bit about the concerns of dependence in this energy transition in Indonesia.
I think it's going to be a structural issue moving forward, Eric. The United States has essentially abandoned on the if there are 50 US researchers looking at batteries, there's probably 20 times more that across 50 different institutes in China looking at batteries. The United States, as the alternative, has essentially decided to exit the game of chasing towards the next iteration of innovation in clean energy. So essentially, for countries, they don't have a lot of options to work with. And I think that the
I mean,
issue here
but is the
isn't.
choice only the US and China, or is Japan a player in this space? Are the Europeans, are the Indians a player in this space? Is it more than just the binary choice between the US and China?
It comes down, Eric, I believe, to cost, right? It comes down to why China has been able to do this, and be sort of essentially the one and only option that's being presented on the table for these global South countries is that China has been able to leverage its full machine, industrial machine, to innovate and to scale and to keep the price down. We've heard everything about the price war that goes on within China when it comes to the 50 plus EV brands that are competing for market share. And these firm has nowhere else to compete other than to try to go overseas and tap into markets like Indonesia. So I think the dependence issue here isn't necessarily the challenge, but it's actually the quality of that dependence, of that interdependence. Because when you look at a relationship like China and Indonesia, I believe Beijing and Jakarta both knows that dependency is actually not good. Dependency for Beijing will backfire in ways that will present as credibility challenges, it will present as reputational challenges. The framing of debt trap diplomacy has, for the past couple of years, brought significant amount of headache to the Chinese in Beijing. To be fair, I think they would also be open to hearing how to make that relationship more balanced, right? How do you, for the first time, if China is willing to consider the impact of a host country, look at how to turn that asymmetry into some form of reciprocity. What I mean by that is China has started, for example, a Global South Research Center. They are starting to build out area studies across universities in Beijing, such as Peking University and whatnot. And I think there is finally a sort of a new uh, sort of urge to understand these countries that China has been around for over 10 years with its Belt and Road Initiative. I think what's missing there, one, to begin with, is cultural understanding. When you ask a person in China, what do you know about Indonesia? The first thing that comes to mind is Bali. And if you ask an Indonesian, what do you know about China? They're your sort of most powerful neighborhood. Most are going to say, we don't, well, I've never been to China, and I've really only read about China in the news. So I think what's really missing there, number one, is that quality of interdependence is not human centric. There's not a lot of understanding around both sides. There's not a common language that can help connect the two sides between China and Southeast Asia, especially in Indonesia, where there are lingering elements of ethnic and possibly religious and cultural tensions that existed throughout the past
Those
few
are
decades.
long-standing. That's right. Those are long-standing concerns and tensions between the ethnic Chinese minority and some of the majoritarian populations that are there. By the way, on the debt issue, we're going to get a preview of how this is going to unfold. Talks between Indonesia and China are underway now to restructure $7.3 billion worth of debt, or the joint venture that owns the debt between the Chinese and the Indonesians for the Whoosh train. That's the high-speed railway that they built recently, and it's been open for about 2 years, but they're having some debt sustainability questions. Overall, Indonesia, though, has a very favorable debt picture. It's under 50% for its debt to GDP ratio. So this is not a case of where Chinese loans are surging into the country and Indonesia struggling to pay them back. They just want this one particular set of loans to be restructured and to be put on a healthier path. So, Kevin, to your point there on this mutual sustainability in terms of the relationship, it's going to be interesting to see how this debt relationship and this debt talks pan out. If it's something a little bit more equitable that the Indonesians are looking for. Let's close up our conversation. You conclude that Indonesia's experience is really in some ways a blueprint for other middle power countries and their strategies and how to engage the major powers in a highly fragmented world. I guess I just want to ask, if you were advising, say, the Vietnamese or the Philippines or Malaysia on how to manage resources, the energy transition, the US-China rivalry, what would you take away from Indonesia as an example of what to do, and then at the same time, what they should avoid?
I think Indonesia, as every other emerging market country should be doing, is to compete with credibility. And that means creating the kind of business and investment environment that's going to attract your high quality and long-term investments into the country. And I think what Indonesia is naturally better well endowed with, its natural resources and its demographic dividend. And it's a country that has, since 2009 and 2013, ambitiously pursued the downstreaming policy in nickel to in ways allow itself to exercise agency. But I think some of the pushbacks that we've been hearing is that Indonesia needs to allow value to remain in the country. It needs to further push for ESG accountability in order to satisfy not just the local governments that are deriving revenue from these industries that are operating in the provinces of Sulawesi, but also allow positive externalities, especially to avoid the sort of environmental and social issues that have come up in these bilateral partnerships, especially in mining and whatnot, and be able to actually invest some of these revenues, some of these earnings into human capital development. I think what is missing for Indonesia, if you look at education levels, is actually 88% of working adults do not have a tertiary education. Now, there's two things you should work on from there on. One, you'll have to focus on giving training opportunities to those people who has not obtained a tertiary education. And two, you have to improve on your educational resources in order for that technology transfer to occur, in order to train your people within your factories that are Chinese funded. Because I think that's the long game, that's the long journey that Indonesia and every other country has to go on. Same as how China, back in the 1990s and early 2000s, were able to leverage engineers that are flown in from Cupertino to build that whole army of engineers and assembly line workers that are able to produce the beautiful iPhones that we all use today. It's a decade-long journey. So I think what Indonesia needs to focus on is really triangulating between industry, investments, and education. I think that's most important, in my opinion, for how to further leverage these waves of FDI into the country and benefit your country in the long term, not just in the short term.
And you would say that applies, of course, to every country in the region, not just Indonesia.
If we look at every country in the region, I believe we already seeing blueprints of how to attain higher levels of educational outcomes. If you look at China, if you look at Japan, Taiwan, Singapore, and increasingly so Vietnam, you can see the impact of education on the whole of society. And I think for a country as fragmented as Indonesia, both geographically, but also I would say there's less unity amongst the population than what a country like Vietnam looks like. I would say it's even more important to invest in education.
Yeah. Well, General Secretary To Lam in Vietnam has made it a priority to close the skills gap in science and technology. And so there's going to be a little bit of a race here in Southeast Asia for which of the countries can upskill fastest. And those countries then will probably be able to attract more of this investment that's coming down from China, especially in these big markets like Vietnam, 100 million people, and then Indonesia, 282 million. So there's the added bonus of manufacturing in these countries, then turning those products around to sell directly into them. So very, very interesting. This is going to be a topic that we come back to a lot. We focus a lot on Indonesia on our site at www.chinaglobalsouth.com. We have a dedicated staff in Jakarta that's producing fantastic analysis. And so I encourage everybody to go check it out. We'll put a link to Kevin's paper in the show notes, Indonesia's Energy Transition, Exercising Strategic Agency in Partnership with China. That was done as part of the Asia Society Policy Institute, where Kevin is an affiliated researcher in the Center for China Analysis. Kevin, thank you so much for taking the time to join us and to share some of your ideas and your great research that you're doing on this very important yet poorly understood relationship.
Thank you very much, Eric. Thanks for having me.
And we look forward to having Kevin back again soon with an update, not only in Indonesia, but some of the other work that he's going to be doing at the Asia Society looking at Southeast Asia. I want to thank everybody for joining us for this conversation on the China Global South podcast. If you'd like to follow all the great work that the team around the world is doing, go to ChinaGlobalSouth.com. We're the only organization of its kind anywhere in the world that's doing this kind of work and doing it in almost near real time, where we're providing within 24 to 36 hours analysis, insight, research on key events that are happening with the Chinese in Asia, Latin America, Africa, and the Middle East as well. Also want to draw everybody's attention to the fact that we've launched our new Spanish language site, China en las Americas. We have links to that in the show notes as well. Maria, who's our editor in Peru, is doing some fantastic work. So if you speak Spanish, of course, you can go check out both our Spanish site, and if you speak French as well, we have a French site focused on Africa. So that'll do it for this edition of the show. I'll be back again next week with another episode of the China Global South podcast. Until then, for everybody at CGSP around the world, thank you so much for listening and for watching.